I think certainly in the larger and more developed economies, they will need to be. The way that I tend to think about it is people sticking to the things that either only they can do or the things that they do best.
What we see most of, probably an 80-20 rule, is that 80% of projects are looking to preserve and enhance the current configuration.
I think we'll see it evolve. And I think that will be a lot of the story about central bank digital currency across the board. It will start as something and it will evolve into something else, exactly as payment systems have done in the past.
The central bank is involved, whether it likes it or not, in some process of ensuring that the instruments that it has been created are not actually being used for the purpose of money laundering, terrorist finance, or whatever it may be. Now, I think as soon as you've accepted that, one of the things you've had to accept is that we're not talking about a classical crypto token here. We're talking about a crypto token which can only circulate within a confined group. So if we're going to allow corporates, individuals, whatever, to handle these instruments, and the central bank has some degree of reassurance that that they're not being used for money laundering, then the central bank is going to have to set the boundaries of that system and to some extent determine what happens within it. Can we solve this with a simple wholesale retail split? The answer to that one is no. This would be a very easy problem to solve if we were to forget about broad usage and go to a sort of walled garden model, where we're saying everybody who participates in this can do whatever they like because they've been pre-vetted and everything in the garden is lovely. That solves the problem, but that's absolutely not what we're trying to design here. But it is, I think, at least possible that the existence of the privacy and money laundering constraints may eventually drive us to a walled garden model. But at the moment, I don't think that's what anybody wants.
The Finality network, that's a perfect example of something we started doing work on a couple of years back called the supervisory node. So you can think of the Finality network as a closed network. But what if the regulator had a node on that network and was able to monitor traffic for systemic risk, for safety soundness of the institutions? There's a lot of, and we are talking to Finality about that concept, there are a lot of opportunities to allow the private sector to innovate and still ensure the safety, soundness, and financial stability or systemic risk that central banks care about. So I think this is an area where technology may allow some of the best things to happen in tandem.
We're already in a world where the technology would support, if you like, a tier one backbone that operates at the same speed as a user facing tier two. We can see that in conventional payment systems, and we can see that in what some of the more modern platforms might look like. It's about what the different actors in the system are there to do. Now, arguably, you could say once the backbone is operating at the same speed as the sort of the front end, does it become a single system? What I do see a distinction in is the different roles that people have and the different things that they are trying to do. And as a central bank, we will be worried about that systemic risk. Likewise, people who are creating innovative products want to focus on their innovation. They don't want to be hamstrung by worrying about the stuff that I'm worrying about. Those tiers are as much about risk as they are about operation.
If we limit the amount in a wallet to some de minimis amount because of bad guys, we're not going to get to a fully functioning and very innovative platform.
It seems to me that in order to be usable as a payment medium in the form that you're talking about, a thing has to have constant value. In other words, it cannot carry interest, positive or negative.
Are there ways to mask identities in a way that as few entities as necessary know who that identity is? You can think of cases, and I don't want to get too technical, but there are technologies called zero-knowledge proofs and other cryptographies, which will allow you to examine data without actually seeing the data and only get access to the data if certain conditions exist, like it's a bad guy. Otherwise, you don't see the data.
The technology today, I think, allows us to think about these things in a slightly different way.
For people who don't understand those technologies and are not necessarily going to take our word for it, how do they build trust in these kinds of systems? I think being able to say, hey, we've got this incredibly strong cryptography will win over a proportion of the public, but there will be a proportion of people who are still skeptical.
The whole identity digital sovereignty thing strikes me as it's one of these lovely ideas that was coined by somebody who didn't have too much experience of reality. What we know about people's express preference in looking at their actual usage of the internet is that they will consent to absolutely anything more or less immediately in order to facilitate the use of websites.
Cross-border it's extremely complicated. It's not just a technology question. We could have interconnected systems and still have to deal with FX issues and different laws, and different privacy and different identity issues.
There's so many layers that you need to address cross-border payments on, and you'd argue that very soon, the technology is the least concern. Things like FX. I mean, that was mentioned earlier. Until we solve for that, that's a very big conversation, a very big debate. How do we solve for FX? Who's gonna manage that? Do we just use old systems with oracles in these networks and just use kind of current FX markets? Do we invent new ones like we're seeing in kind of the public space? On the technology side, we've been grappling with a crawl, walk, run approach, meaning, hey, let's try and figure out how we interoperate just on our own technologies. So this is, a private Ethereum network talking to a private Ethereum network, or a private Corda network talking to another private Corda network. Even that's hard, because you've got different identity issuers on either side, and you've got obviously different notaries and different consensus models, etc. A closed wall kind of, if everyone's in the same network, you've got one identity issuer. If you trust the issuer, well, then you can trust everyone that's in the network. Right. So that seems like an easy option, but somewhat unrealistic. The other option being kind of a network of network architectures, but on the same technology. And to be fair, guys, I think, the interoperability is super complex. I think the goal is to build something that is more standardized and to build a protocol that allows interoperability to be possible regardless of the infrastructure that you build, regardless of whether it's one single network, multiple networks on one technology, or a network of network architectures on whatever technology you want, which seems to me like the model that we should really be exploring, so that we're not constraining individual sovereign countries into saying, hey, you have to build on this kind of a thing. Everyone needs to use this database, else it won't work.
Do I think they'll be killed off? I don't think so. I think if you look at the value that services like the ones you've mentioned, and there are other ones out there, of course, are looking to add, it's not just central bank money settlement. There's functionality and the removal of frictions within probably quite specific asset markets that they're looking to address. And I think if they're doing that, and they're doing that effectively, then the chances of something being superseded by something more general seem less likely.
If it's in place, it's high quality, it's doing its job, the regulators are participants within those networks, why would you change that?
I think we have the opportunity to create a great innovative platform with the central bank digital currency, and then innovation on top of it for client services, for fraud prevention, all sorts of things. And one area that I think we really need innovation in, by definition, non-banks, is in financial inclusion or the unbanked. I really think this is an opportunity to fundamentally look differently at solving some problems. We have a saying in Boston, if you've been to Boston and seen our crazy streets, that's not paved cow paths, because when you pave cow paths, you get Boston streets. So in this case, I think cow paths are the current way we do things. Not that we throw them away, but there's ways to think differently about, say, financial inclusion, or even AML, KYC, other ways of doing that differently, because we're creating a new technology platform.
Most retail users of money, i.e. us, are completely risk insensitive to the risk exposures we currently face to our commercial banks. And if the truth be told, completely indifferent 99.9% of the time to the question of whether our transactions are settled in microseconds or days. If you look at what is currently offered to retail users in terms of the payment services they currently have access to, in order to conclude that CBDCs will make a major difference to that segment of the market, you have to be able to point to a significant advantage that those users would derive over and above the service that they currently have. At the moment, I can't see what that might be.
It's not necessarily what a person wants because they know they've got a problem to fix. There are frictions out there.
Yeah.
There are things that, the cow pass, things that can be done better. Would your landlord want to get CBDC or a 2-day-old 3-party check? Would they want to be, would stores want to take CBDC at zero cost or little cost, or would they want to take a credit card or something else?
These technologies do not succeed each other, they overlap. And more to the point, the introduction of new technologies drives really serious technological innovation in the old technologies. They will place considerable pressure on the existing payment systems. And one possible outcome of all of this is that CBDCs are created, they do circulate, and they are eventually outcompeted by the old technology.
Programmability might be useful maybe in the wholesale side, but then gets really tricky at the retail side. If you control the money, is it really a public good utility? And is it something that's free and open, accessible, anonymous and private, etc.?
I'm not big on programmable money. I think money should be stored and moved very efficiently and with less friction, and innovation can go on top. Put your smart in a wallet, or put your smart at the register that looks for my digital identity that proves I'm 18 or 21 to buy a product. So I wouldn't put it in the money. I believe in relatively dumb money.
Well, I think we'll start with dumb CBDCs, and I think they will get smarter as we go.
And oftentimes you can get there with the old technology.
But we have yet to invent the thing that we need them for.
If I was Sweden, I'd be thinking of a use case because paper currency is not in circulation. If I was a Caribbean island, I'd want it for efficiency. So there are different motivations for doing it. My personal view is we'll eventually get there.
I think it's very, very hard to see where those benefits are. I also think when you look at the current payment system, next time you're holding your debit card and typing the number into a web browser, you need to ask yourself if that's the solution you would invent to that problem. And I think the answer is a clear no. I think we will look back on it 10 years hence and go, well, of course, in the same way that we look back on decimalization. Does anyone want to go back and have pre-decimal currency? No, they didn't, but it still took 150 years for the UK to decide to decimalize. So, let's not be the guys who were sitting there going, well, really, 12 times table is not that bad.